All right, let's get right into it. A massive rally just tore through the US stock market, and it was led by a pretty fierce tech comeback. So, we're going to unpack exactly what lit the fire under this surge, and more importantly, what it means right here for the Korean markets. So, overnight, all three major US indices finished way up. I mean, the Dow and the S&P 500 had some really solid gains, but the real story here was the tech-heavy Nasdaq. It jumped an incredible 2.26%. Now, this wasn't just a little bump. This was a major, significant rebound. So that begs the question, right? After a week of declines and a lot of chatter about overvaluation, what on earth just sparked such a powerful comeback? Well, the answer, it turns out, is in Washington. The main driver was really just a huge wave of optimism. The biggest factor was this growing feeling, this expectation that the long US government shutdown, the longest in history, is finally about to end. And this optimism isn't just wishful thinking. It's coming from a specific political development. Apparently, moderate Democrats have agreed to back a Republican temporary spending bill. That little signal of bipartisan cooperation was exactly what investors were waiting to hear. It just brought a sense of relief across the entire market. And you can see how this sets off a positive chain reaction, right? First, federal employees get back to work. That, in turn, helps consumer spending get back on its feet. And maybe most importantly, it clears up a huge piece of economic uncertainty, which means we can finally get all that delayed economic data released. Speaking of the economy, we're also keeping a close eye on things like the Small Business Optimism Index. The source material uses this fantastic analogy, calling small businesses the capillaries of the U.S. economy. I love that. It really gives you a feel for the health of the economy right there on the ground level. Okay, so let's talk about the real engine of this rally. While the shutdown news lifted pretty much the whole market, it was the tech sector that truly put the pedal to the metal. After getting beat up last week over those AI bubble concerns, these stocks just came roaring back. And if you need just one number to really grasp the scale of this tech rebound, here it is. The Philadelphia Semiconductor Index, a really key benchmark for the chip industry, soared over 3% in a single day. That is a huge move. And you can see the proof right in the individual stocks. Palantir, after getting hammered last week, just surged over 8%. You've got semiconductor giants like Micron and NVIDIA up around 6%, and even the heavyweights like Alphabet posted really strong gains. This wasn't just a couple of stocks, this was a broad, powerful recovery across the whole sector. So, how does all this good news in the US translate across the Pacific? Let's break down that ripple effect and see what it means for Korea's markets. Well, the positive vibes had actually already started to arrive. Just yesterday, the Korean market had a sharp rebound of its own, with the KSIP jumping over 3%. And this was driven by a massive wave of institutional buying. We're talking over 1.3 trillion won, partly on those very same hopes of a US shutdown resolution. And that momentum is pretty much expected to keep on rolling. With the US Semiconductor Index showing so much strength overnight, the immediate outlook for the Korean market today is for a higher open, really just carrying all that positive energy forward. So, where should you be looking? Well, the most obvious sectors are, of course, the semiconductors, think Samsung and SK Hynix. Their performance is so closely tied to what's happening globally. But we should also keep a close eye on AI, secondary battery stocks, and even the auto sector, because this kind of positive sentiment often spills over. But hold on, it's not all clear skies and smooth sailing from here. To really get the full picture, we've got to look at the competing forces at play. Let's pull it all together for a more balanced takeaway on what to expect. What we have here is a real tug-of-war happening in the market. On one side, you've got all this positive momentum pulling things up, the US semi-rally, the shutdown optimism. But on the other side, weighing things down, is the high $1 exchange rate, which is still a pretty big burden. Then you add in some uncertainty about foreign buyers and the chance for some profit-taking, and the picture gets a lot more complicated. This quote from the analyst Rorosha just sums it up perfectly. We're expecting a higher open because of those favorable winds blowing in from the US, but that high exchange rate is a persistent headwind that could really limit how high we can go. It's a classic push and pull scenario. So that's where we're at. We've got this strong, positive momentum from the US colliding head-on with some pretty significant domestic burdens, like the exchange rate. With all these competing signals in play, the key question is, how will you navigate what's shaping up to be a very interesting day in the market?